All right, everyone. I think we all understand that we're in this business. The current environment has been difficult, to say the least, to try to get business. Surprisingly, if you know where to find and what products to get out there, the consumer is still buying. Whether they're buying a $300,000 house or they're buying a $3 million house, the activities are still abundant. We just have to get to the right place, the right way to post it, and command their attention. That's going to be a key. They see so many things out there. How can we get their attention is going to be the key, right? Let me start with a couple of slides here, and then I'll tell you what I usually do to get the business in. All right. The first thing is, it seems like we all have a barrier, whether you're driving or whether you do something in life. We all been told certain things that are a limitation. We can't drive over 55 or 30, can't speak to a stranger. The interest rate is 3% forever. And it seems like once you get stuck with that, we can't get out of it. And if we can't get out of it as professionals, how do you expect the buyers to be able to listen to you? Because you're a professional, you're guiding them. They have no clue. And if we can't relieve ourselves of that, then we're going to have a situation where the buyer's not going to listen to you. In fact, I'm going to find an email this morning, and give me 1 second. I meant to do that, and I didn't do so. All right, let me read this for you really quick, okay? I'm not going to waste your time. It's going to be a lot of reading. So this guy's looking for an ITIN program. ITIN programs are people that don't have Social Security number. I gave him the guidelines, gave him the little gist about it. And I said, unfortunately, with today's interest rate environment, the rates for these programs are really high, 9 to 10%. So I didn't expect him to respond back, and he responds back and say, thank you. Most of our buyers are paying 11% and happy about it. If we can get them 9 to 10, they pick whatever house they want. They'll be thrilled. Now, this is from a real estate agent in the Dallas area. So I put a barrier to myself by saying that 9 to 10 is high. This gentleman come back and say, no, 9 to 10 is perfect. So having said that, I think we as professionals need to stop putting a barrier, because people do have needs. When you do have needs, it is not the rate, it's what they're going to be accomplishing with that, right? So that's going to be the first conversation that I want to have. Sorry. All right, so with that, we have to understand that based on this chart, you can see rates today hover around 7%. This is a Fannie Mae or Freddie Mac loan, 7% for a 30-year fixed rate, conventional, good credit score, etc. So as you can see, the market is high. However, people are still going back to a year ago when rates are still at 3% or lower. And so therefore, they have not crossed the barrier. They don't understand this. And you have to make sure they understand what the market today is and why is it that, right? So I'm going to take one step further by giving you the basic economic lesson. Anytime your mortgage rate is lower than the inflation rate, you're doing well. Inflation is well above 8%, and if mortgage rates at 7%, it's doing really well. And that's the reason why the Fed's trying to raise the rate to catch up with the inflation. So in generally speaking, in a perfect world, the inflation rate is below the interest rate that you're paying. Now, most people can't swallow that, but that's the fact of the economy, okay? Having said that, we still have to be sensitive to what they're paying in payments, right? So just because say, hey, the market's that, the market's higher, you just have to accept it. They won't understand that. However, what we can do is to lessen the pain. We somehow have to lessen the pain so they can get into that home and then get used to making the payments. So the first example that I'm going to show you is very popular in the past couple of probably 10 plus years ago, is recently coming back. So most people who got in business less than 10 years don't know how to use this or have only been hearing about it as of late. This program is a 2-1 buy down. What it simply means is the lender discount 2% in rate for the first year, 1% for the second year, and then anything after the 3 years will become the normal rate. In this example, you see a $500,000 purchase, $100,000 down, $400,000 loan. Year one, instead of being 7% for a conventional loan, It starts at 5%. The payment at 5% is $21.47 compares to 7% of $26.61, or saving up nearly, or actually over $500 a month. That is quite substantial. Year 2, it is 6%, and subsequently their saving is $263 compares to year 3. Now, most people are paying rent, they're trying to get into a new home, they're afraid that the mortgage payment is so high. This will give them that step up payment that allow them to get used to the new mortgage payment. Now, obviously, we can't forecast the future. We don't promise anything in the future because no one knows, but there's a good chance that rates are going to get better in the next 2-3 years. And when that happens, they can always get a refinance and lower the rate. But this, again, will get them to a step-up payment rather than go into a 7 years and be surprised or be shocked by the current rate. The term that they use for this is called 2-1 buy down. I prefer to call it step-up mortgage. The consumer understands the step-up mortgage better, so use the term better. Now, how do you find the business? If you're a real estate agent, you're a loan officer today, advertise this. Your mortgage payment can start out as low as 4.99. I know 5% is what we're talking about, but you can certainly use 4.99. Sounds a hell of a lot better than 5. So what you want to do is to trigger and start the conversation. You don't necessarily commit into anything, you're not quoting anything, but say, find out how your mortgage can start at 4.99 in today's rate, okay? Or if you're a realtor on the line, you advertise a home, and then again say, find out or ask me how to get your mortgage payment at 4.99. That generate the calls. Our sales, most salespeople's job is to generate the call, get the appointments. You're not supposed to give them all the information. So if you give this whole slide, they will not call you because they have the information, right? But if you tease them, say, get your mortgage payment started at 4.99, ask me how. That will generate the call because they can say, well, how do I do that? That's what you want. Now, interest rate buy down is a little bit different than the step-up mortgage. Interest rate buy down simply means that if you want to pay more to get the interest rate, then you certainly can do that. The example, if today we want to do a 7% interest rate, the buyer may have to pay 1% loan origination fee, or $4,000 in this case. If they say, hey, 7% too high, I want 6.75, they subsequently will have to pay 2 points or $8,000. And again, if they want to pay further, then go to 6.5, then now they pay 3 points or $12,000. Now, this is not always this ratio because each program has different ratio, but it does work the same way. What I would suggest today for most real estate agents, and we've been working very successful with real estate agents, is with the markets being soft, a lot of builders, a lot of home sellers are given credit back or discount their home. What you can do, instead of ask for a $10,000 reduction in the purchase price, it is maybe better to apply that $10,000 towards buying the closing costs or buying the rate down. So this is what you want to go back and educate your real estate agent or your real estate partners to say, hey, negotiate with at least $10,000 to $15,000 in seller pay closing costs. Then we'll use that to apply that to buy the interest rate down to make it less painful for your buyers. Okay, so this is what we call interest rate buy down versus the previous scheme. Previous slide is called 2-1 buy down. So that's the reason why I'm trying to stay away from calling it a 2-1 buy down. Make sure you use the right lingo to help the buyers. This is called step-up mortgage. This is called interest rate buy down. Okay. Now, on a larger purchase, you know, typically the 300,000 purchase, 400,000 purchase, you may not have this problem. But there are plenty of people that buy $1 million, $2 million houses, including Texas. I know there's some people from Texas. Trust me, there's actually homes that are $1 million to $2 million in Dallas and Houston area, or even San Antonio. So those people feel the pain even more. So in those cases, for the larger loans or jumbo, we often offer the interest-only payments. What that means is they do not pay the principal. And this will again help to further reduce the pain of that high interest rate. Now, in this case, I use interest rate quite high to demonstrate the effectiveness of using interest only, but this is not a rate quote by any chance. In this case, of $1 million, $200,000 down, 20% that is, new loan $800,000. If you do it fully amortized, which is principal and interest, your payment of $5,870. Interest only is $5,417, or saving roughly $500 a month. This is very helpful. Somebody's trying to reduce their monthly payments. Now, those are some of the traditional tricks that we have. Now we're going to have specialty loan programs that help buyers that do not qualify traditionally. And when you talk about specialty loan programs, 90% of the market do not understand that these loans even exist, whether they're loan officer, whether they're real estate agent. So if you're on this call, you now have an edge that these programs exist. So therefore, you can actually start to drip information out to social media, calling your partners to tell them that these programs are available, so they can look at their database to see anyone who actually have gone through and did not get approved. The first program is extremely attractive. This is one of my favorite as of right now. I'm not sure how long it's going to be available, but it is available today. Probably for the next 6 months, I would imagine it's still here. This program uses a standard form called verification of employment. This form's on your screen here. It's very simple. It said how long you've been at the work, what do you do for a living, and what your income is. The employer simply fills this out and send it back. We do not need any tax returns. We don't need any pay stubs. We don't need any W-2. The beauty is this program is currently doing for a 5% down payment, which is the lowest down payment you can get for a no-income qualifier. The rate is also quite attractive, 6.5% fixed rate. Again, quite attractive in today's environment. The loan amount is restricted to the local loan limits. So for example, if you're in Dallas, I believe it's around $450 is a loan limit. If you're in California, you can go up to $970,000. So it does go to the county limits. Okay. Now, the only caveat to this is the income. We understand that it may not be exactly to what they're getting, but it does have to make sense with the job and the area that they're working with. So what is this program created? Why do they even create it? Well, there are a lot of people who work and don't necessarily receive all their income on a W-2 or a paycheck stub. Who are those people? Manicures, for example, they may get a fixed base of $3,000, but they get substantial tips or bonuses that do not get reported on the income, right? Food services, waiter and waitresses, casino personnel, dealers, and so forth. Quite a few industries that do have quite a bit of, we call it cash income. So this form would be perfect for them to use because the employer now can indicate how much they get aside from their base. And that's the reason they designed this program, okay? But again, it must be reasonable to the trade that you're doing. So give you an example, if somebody who is mechanic and you're saying that he or she making $15,000 a month, that would be unreasonable. So it definitely have to be matched to the local salary range for that area, okay? I didn't put the credit FICO score. In fact, I should have. The FICO score will go as low as 580. So that's actually going to be another plus for this particular program. VOE conventional. Well, somebody say, well, you know, I don't want the FHA because FHA does have the monthly mortgage insurance, which sometimes, some reason, Asians do not like mortgage insurance. And regardless of the reason they don't like it, we do offer a conventional VOE program without mortgage insurance. Unfortunately, currently, it does require a substantial down payment of 30%. And with that, the rate is at 7%, which again, in today's market, without proven tax returns, this is a good rate. It does allow you to go up to $1 million. So it does allow you a larger loan amount if they're buying a larger home. Profit and loss are for people who owns a business. This would be your restaurant owners, hair salon, nail salons, even real estate agents. Many of you are a real estate agent on the line. You can use this for yourself. Okay. What it means is you simply state on the form, look like the form on the screen. What is your total gross income less your expenses to run your business? And at the end of the day, you have a net income. In this case, the net income's in yellow. It's 178,400. That would be the income we use to qualify you without the proof of tax returns. So the beauty is this is the form. All we need is this form. And if they don't know how to prepare, we certainly can give them some guidance and they can prepare. The down payment is currently 30% for this program. And the rate again is at 7%, which is quite attractive. Loan amount up to $1 million. We can actually go higher loan amount, which additional down payment of 35 and go up to $2 million. But and for this example, I kept it at $1 million. Bank statements. Bank statements are a program designed for a self-employed individual. Again, leverage the deposit that comes to your bank. We don't consider the expenses. You can take out as much as you want. We only care about the deposits. Okay. And we have two series for the bank statement program. The first one is the Gold series, which is the better program, of course. It is 35% down. And again, rate today at 7%, which is an incredible rate, especially for loan up to $5 million. So this is a great program. In fact, we got a couple of approvals at $3.5 million on this program, and the borrower is ecstatic because no one is even offered this program. If the the borrowers don't have the 35% down, which not everyone does, unfortunately at 20% down, the rates will be higher. It is 8.25%. But again, with less down payment, there's more risk to the lender, and so the rate's going to be higher. The 20% down, we can go up to $2 million loan amount. Okay. We just launched a true stated income. Okay, this one is an incredible program. Again, it seems like it's geared towards the higher down payment. Believe it or not, there are plenty of people who do have higher down payment. They're willing to put the down payment if the interest rate is reasonable. So in this case, 40% down, rate is 7% up to 1 million. We do offer for both W-2 employee and self-employed. So for W-2, all we need to do is call the employer. Let's say they call to Loan Direct, say it's Joe Lamb working here. Yes, he is. That's all they need. They don't need to ask for how much I make for a living. Okay. If I'm self-employed, they only need to verify my license. I don't need anything else regarding income. So this program is extremely easy to get qualified. Unfortunately, you do need 40% down. Now, everyone understand about DSCR. DSCR has been run into a couple of problems. Typically, DSCR using the current mortgage payment compares to the market rent, and they divide by that and they get a ratio. With interest rate gone up high, in fact, most DSCR are now approaching 9%. It's very hard to make its one-to-one ratio. Okay. Now, so we have created a program on the Gold DSCR. Obviously, again, with 40% down, we brought the rate down to 7.25 today, and we actually make a modification to the way we calculate income. You take the rental income times 75%, which is a standard what Fannie Mae uses. So, example, a $4,000 monthly rental, 75% would be $3,000. Then you divide it by the P&I, which is the principal and interest. Don't need to add tax, don't need to add insurance in there. That would be its DSCR calculation. And we're looking for a one-to-one ratio. So this method will get you a better calculation because we don't consider the tax and insurance. And it actually works better for states like Texas, where the tax is much higher than other states. So this one I would recommend for Texas to take a look at this one. Again, you guys are at the 2% to 3% tax rate. This is helpful because we don't calculate the taxes in there. Okay. Last but not least, we are very excited about this program. There are plenty of people who comes to us and say, hey, we don't have any job. We don't work for a living. And what do? Well, in the past, all we've done is to put them hard money, right? You know, hard money, when you hear the hard money, there's a couple of things with hard money. Short term, usually 1 to 2 or 3 years, you have to pay it off. And then interest rate and fees are high. So interest rate typically up in the 10%, 12% range because hard money, and then fees are 3 to 4 points. So that's the reason why it's high. We have designed a program that kind of give those people a way to do loan cheaper. In this case, 30% down minimum at 7.25 rate. The loan can go up to 5 million, so that covers quite a bit of loans. We don't need income. We don't even need credit. So in other words, if they had bankruptcy yesterday, it's okay. We don't care. What is the catch? We do need to hold 36 months of P&I, principal and interest, in reserve. So we use that money to secure or to make sure that they make the payments on time. Well, it makes sense, right? Because you don't show anything, the lender want to make sure you're not going to miss a payment. Okay. In the example below, you're going to see someone who owns a house for $900,000 wants to take a loan for 70%, which is 630. Rate of 7.25. We actually locked it a little bit higher because rate do move up and down. Locked at 7.5. P&I payment of 4405 times 36 months of reserve. That is 158,000 roughly. So they're getting back 471. So the 158 staying with an account called an escrow account, and that will be used to make monthly payments. This program is extremely good for people who, again, don't want to worry about, verifying their income. They don't want to worry about making payments. So this payment is good for 3 years. They're, once in there, it's done. Perfect for older people. Again, they don't, this is the alternative to what you may have heard, reverse mortgage. This would be something similar to that. But the only difference is this is not reverse. They still have to make monthly payments, which effectively reduce their principal balance. All right, before I go to the aspect of how to drip this out, any questions on the particular programs and so forth?
I have questions about the CRN.
Yes.
With the limits of 2 million, does it matter how many properties the investor can buy, or it don't matter how many as long as it's within that?
No limit. You can no buy limit. Up to 10 properties, 10 no problem, no limit at all.
And that is there any prepayment penalties if they want to pay off or refinance? What are the downfall if they sign up for that?
That particular program, the DSCR, has 18 months of prepayment penalty. So after 18 months, there's no penalty at all.
18 months. Okay.
18 months. That's 1.5 years.
Mm-hmm. Oh, okay. Well, that's not very long at all. Okay.
No, that's shorter than industry standards. 2 years. We kind of short that. So we take a lot of the industry programs and look at how we can tailor it to make it more attractive in today's environment, right? As you know, we're being challenged by the rates going up and then all of that. And even lenders are pulling back on guidelines. And so we're looking at to expand the guidelines and make the rates lower. And that's the key to what we're doing.
I see. Okay. I'm in Florida and I don't know who over here I need to talk to, or is it you? I need to send the application through if we have a buyer, because I'm not sure.
It's best to send a scenario question and then we can answer that and we'll assign you to a particular agent. So the scenario, you're welcome to send it to me and I'll assign to the appropriate agent.
Oh, okay.
All right. So the next step is, all that information. How do you get buyers to come in? There are plenty of groups that are available today, and I'm going to use one group as an example. So there are investor groups on Facebook. Investor Underground, 35,000 members. This would be great to tout that, hey, our goal DSCR is starting at 7.25 rate. Done. Don't say anything else. They'll come in and ask you, how did I get that? Well, you tell them the guidelines, right? Now, they may not fit that because they may not have 40% down. They may have 30% down, etc. But your job, again, is to generate interest to come in so that you do have a lead, right? In sales, the more leads you have, the better chance you're going to be able to capture the business. So don't be afraid to get those leads in, to get those questions. The more questions they have, the better. There are plenty of people who needs DSCR. So dripped out DSCR starting at 7.25. In addition to, I forgot, I apologize, I did not mention, our DSCR does allow for short-term rental or STR. So dripped out DSCR available for STR, you will get plenty of calls. You may not be able to, you will be very busy. Okay, so you, as a programs here that I've just mentioned, all you do is got to drip out to people. If you're a real estate agent, attach that to a particular property. Let's say, Tina, you're in Jacksonville, attach a luxury home at $2 million and say you can finance this with no credit check, no income check for, I think it was 7.25. Of course, they're going to need to put 40% down, but at least that's will get the conversation started, right? So that would be, something that you want to do. You don't want to give them the whole story. Whatever I just showed you, that's for your information. You drip those information out one at a time. And I'll send this all to you. Like this particular program, no income, no credit needed, starting rate 7.25, inquire today. That would be what I put. Okay, now those are MLO, NMLS license, which obviously you're sensitive about being quoted interest rate without APR. Congratulations. This is called considered business purpose. We do not need APR quoted. This is not a TRID loan, so you are not in violation of NMLS rule.
Joe, this is Julian. I have a couple of questions on this program.
Sure, please.
All right, so the NODOC program, first and foremost, does it apply to foreigners? Can a foreign national buy a property in the US?
This would work for foreign nationals as well.
Okay, so on the 30% down, does that be seasoned? Does the money have to be in the bank?
You do need to have season for 60 days, or you can do gift funds.
Okay, so you do gift funds.
Yeah. Now, if they're foreign buyers, they may have access to that fund in their country of origin, which we actually can use as well.
Oh, okay, that's good.
Yeah. A lot of people who are international, they're well-versed internationally, they do use HSBC or banks that are considered international. So you find that they actually pretty well-versed with banking systems.
So can you elaborate on the 36-month reserve?
The 3 years reserve means the lender is going to hold the 3 years worth of payments in an escrow accounts. And the reason they do that is they'll use that to make monthly payments for you.
So you put it in the bank, or they put it in whose bank?
And put in the bank, correct. It'll be in an institutional bank like a Wells Fargo or a B of A.
So the lender will be the trustee of the account?
Yes, it'll be a trust account, just like you would do your impound account on your tax and your insurance. So we would be the same way.
All right, so there's no prepayment penalty, right?
This particular one has an 18 months prepayment penalty.
All right, so after 18 months, they can pay it up.
There's a way to buy down. Buy it out to 1 year. Let me get the quote on that. Unfortunately, I don't have that on top of my head, but you can buy it down to 1 year.
So this is actually a 5 years amortized 30-year, 5-year due program.
It's a 5-year balloon payments, but it is amortized for 30 years, correct?
Okay.
Yeah. In fact, I think we give you a quote on this particular loan.
Yeah, you did. So can they purchase a property on an LLC? They have to be individually.
This one will need to be in an LLC. So if they don't have an LLC, we have a process set it up quite quickly. Typically, an LLC can set up in about 10 days.
In California, much faster now. You can actually have an LLC set up for a week or 2.
Yep, exactly, in about 1 week, correct.
I don't recommend it. Okay, I know how to do LLCs. Be easy. Okay, that's pretty simple. The other program that you talk about the interest only. You go back as an example. You have 8.25% and 8% interest only. Let me ask you the question, because to my understanding, interest only meaning that if you take a new loan $800,000 and interest only is 8 and 1/8, So basically, I'm roughly about 65,000 a year, divided by 12 months. So the payment will be a little bit more than 5417, right?
It may be miscalculated. Let me just do a quick check for you.
Yeah, it's like 800,000 times 8.25, 8,300.
Yeah, I have, yeah, 5416 or 66. Yeah, so that looks all right. It looks correct.
So you take 800,000.
800 times 8.125% divided by 12.
Okay, maybe I miscalculated. Okay, got it. Okay, I got it. Thanks.
Em có question on the deposit into the bank statements.
Mhm.
How do you calculate the deposit? Like as in you trying to get them equivalent to the income that they receive, or how do you know
So-
what is the right amount of the deposit?
Good question. Good question. So this is where we, this is very important to work with people that understand how to work on it. So most businesses have a gross deposit. I'm going to take a restaurant. Restaurant bring in $100,000 a month. So in 12 months, that's $1.2 million. Okay, so we simply take $1.2 million, which is the gross deposit. We now have to understand the restaurant business to put together a profit and loss for them. So in this case, using the restaurant business, we happen to understand that the food cost is roughly 25 to 30%. So out of $1 million, you take 300,000 for food costs, which is again typically what the industry is. Now you got to pay rent, now you got to pay employees, etc. At the end of the day, that $1 million now have $300,000 left. That would be their income that we use to qualify them.
Okay.
So we have to understand the business. For example, you're a real estate agent. You're not going to have food costs. You're not going to have an office cost. So if you bring in $1 million, likely you're going to keep $800,000. So we have to understand all businesses across the board. And that's the difference between a lender that understands and lenders that don't. Because the format's still the same, but if the lender they haven't practiced enough, they wouldn't have all those businesses that they actually can do a profit and loss that makes sense with the industry. Right. And then we do work so many the industry that we kind of have a general outline for most industries come in that we're able to calculate for them.
So then you would take whatever left there and you divide it by 12 to make it like a monthly income to qualify them then.
Correct. That is perfectly.
Hi, Ann.
Yes. Hi.
You hold 36 months of payment. Is that are we going?
That's only the last program. That's the bank statement programs. We don't hold anything. Only the one program towards the end that we hold that 36 months.
Okay. So if
Yeah,
you hold
not-
36 months, do we get an interest on that one or no?
It's a not interest. It's non-interest bearing. And that's, by the way, a good question. I'm glad you did ask. And let me tell you now, keep in mind, only this program that we hold this 36 months, the lender is making some money in that 36 months, and therefore they give you a little bit break on your interest rate. So it is nothing for free, as I said it. They're just a teaser. They're holding this. They're making money on your 158,000. That's why they, instead of give you 8% or 8.25% rate, they give you 7% rate on the loan.
Okay. Thanks.
So yeah, there's a catch. It's just a way to present it to the customer. But having said that, I would tell you that program offers the people that simply don't have job, people that have no credit, and they have no way to get a loan, right? In today's world, you either have job or you have credit, but if you have none of those, you simply can't get a loan. So that program allows you to offer the loan to people that simply just can't get a loan, period.
Question on that 36 months, and could that be gifted too? They can just transfer that in.
It can be gifted, or if it's a cash out from your home, if you don't want to take the money cash out, the cash out can be used for that.
This is a lot of information, good information. I think we're going to be getting quite a bit of leads here. So
Yeah,
I don't know
but
yet
again,
how big your
take-
team is. Yeah.
Take that package that I'm going to send to you, everyone, drift it out. Don't
Yeah.
send everything at once. That should last
No,
you
we
probably
understand.
a month's worth. Yeah, takes last you a month worth of drifting out. And I encourage you, try it. It will work because we do it here and it works because people inquire, hey, I saw that no doc program at 7.3, you know what? That they call, and that's how we get the loans in. So there are active buyers, and this this is not just limited to, low price buyers to high end buyers. Last week we had people are buying $6 million still have problem qualifying. So don't think that only this is the problem for the poor, problem for the rich also. They just don't show a lot of income. Well, great. Happy Halloween. I'm glad everybody got on. We'll send this package out to everyone and enjoy your Halloween night. Okay.